Let's talk about something really cool. Have you ever wondered if a machine could actually learn how to beat the stock market? Well, today we're going to peek under the hood of a Python script that does just that. It trains an AI to trade stocks. Let's dive right in.
So the big question is, how does this even work, right? How do you take what is basically a blank slate, just a bunch of code, and teach it something as complex and frankly as chaotic as trading? That's what we're going to break down.
To make this easier to follow, we're going to frame this whole thing as a story. Think of it like a hero's journey. We're going to follow our little AI agent from its very first, totally clueless day on the job all the way to, hopefully, becoming a pretty savvy and profitable trader. It's a story of trial, error, and a whole lot of learning.
Now, every hero needs a training ground, right? A dojo, a place to learn the ropes where the stakes aren't, well, real. For our AI, that place is a simulated stock market.
This all starts inside what the script calls a trading environment. The best way to think of this is like a super realistic video game, or maybe a flight simulator for a pilot. It uses real historical stock data, so the situations are legit, but the money, totally fake. This is awesome because it lets our AI make thousands, even millions of trades, crash and burn, and learn from every single mistake, all without risking a single real rupee.
So let's get specific. What are the rules of this game? Well, our AI is laser-focused on just one stock, Reliance Industries on India's national stock exchange. Every time it starts a new game or an episode, it gets a fresh balance of 10 million rupees. And its entire view of the world, the only information it gets, is the last 50 days of market data. That's it.
And here's the core rhythm of the game, the gameplay loop. For every single day in our simulated history, the AI looks at its 50-day window of data and makes one of three simple choices: buy, sell, or hold. The environment then tells it what happened. Did you make money? You get a reward. Did you lose money? You get a penalty. And it just does this over and over and over again, thousands of times.
Okay, so our AI is playing this game, but what's actually making the decisions? What's the brain behind the operation? Well, that's where the neural network comes into play. The AI's brain is a specific type of neural network called a deep Q network, or a DQN. Now, don't let the name scare you off. You don't need to get all the complex math. Just think of it as a really sophisticated pattern matching machine. Its entire job is to look at a market situation and say, okay, given everything I'm seeing right now, this is the action that's most likely going to get me the biggest reward. The way this brain thinks is actually beautiful in its simplicity. The input is that 50-day chunk of stock data we talked about. The network then processes all that information, looking for tiny patterns a human might never even notice. And then, the output is just a simple recommendation. Action 0 means buy, 1 means sell, and 2 means hold. Simple as that. Okay, and this is where the real magic happens. How does this brain go from just making completely random guesses to building an actual profitable strategy?
At the very beginning, our AI is basically Socrates. It knows that it knows nothing. For real. Its first actions are completely random. It's just flailing around in the dark, trying stuff to see what sticks.
This brings up a classic problem in AI, the exploration versus exploitation dilemma. Think about it. Should the AI explore by trying random things, which is risky but might lead to discovering a brilliant new strategy? Or should it exploit the best strategy it already knows to maximize its current profits? You see the problem, right? Too much random exploring and you never cash in. But too much exploiting, and you might get stuck with a mediocre strategy forever, missing out on something better.
The script controls this delicate balance with a variable called epsilon. Just think of epsilon as the AI's curiosity meter. When epsilon is high, the AI is super curious, doing a lot of random exploration. As that number gets lower, the AI gets more confident and starts to exploit the strategies that it's already learned work well.
So right out of the gate, at the very beginning of its training, epsilon is set to 1.0. That means there is a 100% chance it's going to take a random action. It's in full-on exploration mode. It's basically a toddler just bumping into furniture to see what happens.
But look what happens after just 10 runs through the simulation, 10 episodes. The epsilon value has already decayed down to about 0.6. So now there's only a 60% chance of a random move. The other 40% of the time, the AI is actually using its brain, that neural network, to make a strategic choice. It's starting to grow up.
Now, to speed this all up, the AI has a kind of short-term memory. It stores its last 2,000 experiences, the market state it saw, the action it took, and the reward it got back.
Then, every so often, it grabs a random batch of these memories and replays them to itself, reinforcing the lessons from its past wins and losses.
Okay, so that's the theory. We've got the training ground, the brain, and the learning process. But the big question remains, did any of it actually work? Let's look at the results.
Check this out. Here's a summary from the script's output. In episode 1, when its actions were almost completely random, it lost over 150,000 rupees, which, yeah, that makes sense. But by episode 5, as that epsilon number dropped and strategy started to kick in, it made a profit of over 2.3 million. And by episode 10, that profit grew to over 4.1 million. You can literally see the learning happening right here in the numbers.
And here's what that looks like visually. The final result is pretty incredible. It started with 10 million rupees, and by the end of its 10th training run, the AI grew that portfolio to over 14 million. That's a 41% return, learned entirely from scratch, just by playing a game. So what's the big takeaway here? The really crucial point is this. The AI wasn't given a strategy. Nobody told it when to buy or sell. It was simply put into a risk-free environment, given a goal, make the reward number go up, and through pure trial and error, it taught itself a winning strategy.
And that kind of leaves us with a fascinating thought, doesn't it? This exact same process, this loop of environment, agent, and reward, is being used to teach AIs how to do all sorts of things, from mastering complex games to controlling robotic arms. So if an AI can learn the hidden patterns of the stock market in a relatively simple simulation, what other complex, real-world patterns could it learn to master next?